Now to the labor market. On the eve of tomorrow's big jobs report, we learned this morning new jobless claims remain at levels consistent with a strong number. The 4-week moving average on continuing claims, its highest level in 2 years, but it also retreated somewhat last week. So is the labor market still going strong? Let's ask Recruiter.com Chairman Evan Sohn. Evan, in some ways the trend from a 30,000-foot point of view should seem obvious. The labor market is slowing, and yet it seems it's not slowing enough that it really is making that much of a difference right now.
Yeah, well, good to see you again. Look, I think the segment you just had talked about candidate sentiment, and we saw the same thing. For the second month in a row, the candidate sentiment increased to 3.5 out of 5. So a year ago it was at 3.7. So that means that candidates are feeling okay leaving one job for another. At the same time, recruiter sentiment is down to 2.7 out of 5, a low on the recruiter sentiment, as sort of this leading indicator for where things are actually happening. And we also saw from the Joel report about 8% fewer job openings. So there are fewer job openings. There's more volume, as you just showed, for those fewer jobs with less compensation. Compensation is not increasing as much as it was certainly a year ago. So that's making the recruiters really their sentiment be at an all-time low relative to the overall year. But as you just said in the last segment, you're seeing a very consistent quit rate that's higher than pre-pandemic levels and a hire rate that's also consistent.
Interesting. So this is a bit of a divergence or something new. Recruiter sentiment, lowest of the year, 2.7 out of 5. A serious decrease in open jobs driving an increase in application volume. So more work for fewer open jobs. And interestingly, also point out, only 11% of them saw an increase in compensation.
That's right. So the days of hire at any cost and just get people and get people fill the seats, that's over. Yet, as we just learned, candidates still are comfortable leaving their jobs. So they're comfortable they could find a job. They're more comfortable than they were in the past, but it's at a less of a compensation level.
Yeah. What does this point to you then? And again, the kind of the pay and trade tomorrow, I think, is a strong number, right? That kind of upends what's been going on with bonds, sends yields higher again, and all the rest of it. But if we stay on trend, then it sounds like the trend is that we've been slowing.
That's correct. And you look at, in the Aura report, we talked about this last month, the Aura report on job trends, the top industries were actually staffing and recruiting. So that's a good sign for the future. When companies start hiring more recruiters, they're looking for the future. But you start to see downturns in other sectors like computer and in the software side. And I saw you talked about AI in the last session also. And obviously, healthcare has always been a very strong sector as well. We saw a 70% increase, almost 70% increase in AI-related jobs in the financial sector, month over month. So more jobs in the financial sector looking at AI, and that's not just customer support, but it's customer support, it's analysis, it's regulations, it's really across the entire financial services portfolio. And that might be pointing to, as we've talked about, sort of this rolling layoff side, these rolling layoffs, financial services might see more of those sometime in 24 as the benefits of AI affect the overall labor market, obviously lowering OpEx as well.